Xpeng listed in the New York Stock Exchange in 2020. Is the plan to eventually enter the U.S. market?
Well, I think the U.S. market is always a very big and attractive market, but right now we have no plan to enter at the moment. Obviously, there's a lot of things going on in that market, and as a young company, we have limited resources. We have to focus on where we can make an impact immediately.
Now, we heard from President Biden this week about the tariffs, and the intention is to keep the affordable Chinese-made EVs out of the U.S. to tackle strategic overcapacity. Are those concerns founded, and is there a supply glut?
Well, first of all, I will not comment on the statements, but I would say that EV, as well as smart EV, is a huge growing segment of the economy. I think if you see high growth segments, it's hard to predict there will be overcapacity, because there will be a lot of overcapacity comparable in ICE worlds, right? I mean, if you use that as an analogy. So I still very, I would say, confident that there will be a lot of robust demand around the world for, beautiful, affordable, green and smart products. And I think our product will fit in that category.
Now, we watch the latest moves coming through from the United States. The European Commission has an anti-subsidy investigation that is ongoing. What happens if the EU follows suit?
Well, first of all, as a company with global ambitions, we're monitoring these developments very closely. Secondly is that as a company, we just have to deal with whatever challenges that we'll be facing. If there's any situation the EU requires changing strategy, changing in pace, require local deployment or investment, we have to look into all these. So as a company, we just have to be nimble to respond to various challenges in developing situations.
Xpeng, a rising Chinese EV and self-driving vehicles company, sees a huge growth potential for EVs in China and around the world. But just like BYD, it says that it's not planning to enter the US market. This is likely thanks to the new tariffs the Biden administration set on Chinese EVs, but it could also be a result of the unpredictable nature of the American market, where many EV startups struggle to compete against the leader, Tesla. This statement from Xpeng's vice president is a win for Tesla, as the company could now roll out its new affordable models without having to worry about Chinese competitors offering cheaper models in the US. And at the same time that Chinese companies are struggling to enter the US market, Tesla is expanding heavily in China and the entire continent of Asia. In today's video, we're going to talk about why Xpeng's pullback from the US market is great news for Tesla and cover Tesla's newest expansions in Asia. But before we dive into today's video, if you want to keep up with Tesla's latest updates, as well as other large caps, you can follow our Twitter account. We post multiple times a day about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Electric vehicles from China are very inexpensive. Is it likely that Americans would buy them anyway? Is there an appetite for cheap Chinese EVs?
Well, the auto industry is a global industry, as you know, and all competition needs to be taken seriously. At the end of the day, the consumer decides. Consumers want choices, new technology, and value. The U.S. EV capacity has now exceeded consumer demand for EVs, and we're starting to see conquest sales through price deals and incentives. Competition is expected to continue to increase, with 10 more EVs hitting the U.S. market this year, particularly in the mid-size SUV and truck segments. SUV and truck sales make up over 80% of the US market. In contrast, small cars make up less than 1% of the US market. The $11,000 China Seagull would be in this small car segment. The Chevrolet Bolt, also a small car, under $20,000 with federal tax incentives, during its peak, sold less than 0.5% of industry monthly retail sales. I'm not an expert in geopolitical decision making, but consumers are looking for lower cost vehicles within the segments of their preference. There is a void in the marketplace, and this is similar to the late 1980s, early 1990s, when Hyundai and Kia came to the US market looking to fill the void. Whether low-cost EVs are first offered by domestic brands, Asian brands, European brands, or Chinese brands, we'll have to wait and see, but there is a market for them.
Xpeng has developed its own proprietary autonomous driving system called Xpilot, and they are independently developing self-driving capabilities instead of relying on third-party platforms. They use a LiDAR sensor system for their self-driving technology, which is different from Tesla's FSD system. We know now that Tesla is trying to bring its FSD software to China, so it might face some competition from Xpeng in the country when it comes to autonomous driving, even though FSD is a lot more advanced than Xpilot. Still, the two companies won't be able to compete in the US thanks to the tariffs scaring away Chinese EV makers, and this guarantees Tesla's dominance in its home country. Additionally, Tesla's FSD still has more advanced overall capabilities as it is based on real-world driving data, which it uses to train its neural networks. So, as Tesla expands in China, it could leverage its lead in self-driving algorithms to surpass Xpeng's autonomy features, and this will definitely help Tesla grow its market share in China. Hello everyone, and welcome back to Investocracy.
Tesla CEO Elon Musk hopes to test his robo-taxis in China, but the EV maker is entering a market with some stiff competition, and Eunice Yoon joins us now from Beijing with more. Hey, Eunice.
Hey, Joe. Well, tech giant Baidu has a fleet of 500 robo-taxis already in the city of Wuhan. And this week, the company announced that it plans to expand that to 1,000 fully self-driving robo-taxis by the end of this year. So we went to Wuhan to find out just what the service is like today. I'm at my hotel in Wuhan, and I'm going out to dinner. And I decided that I'm going to take Baidu's self-driving robo-taxi. You need a special app. But not everyone can ride. A notice pops up and warns, no young children, pregnant women, elderly, the infirm, or anyone with a bad heart. I'm in the right part of town to get the service, but the app says that I need to walk about 100 feet to get to the closest station to board the robotaxi. The trip costs about $3, and thanks to steep discounts, that's about the same as a regular taxi. We got one, and it's coming in 15 minutes. So here's the robotaxi, but there's a driver inside. The staffer told us to catch an unmanned cab, we needed to go to another pickup point. Less than half of the taxis still come with safety personnel. We did, and another showed with another assistant. Finally, we got one without a human. Wait, no one is inside except for us. We're on our way, but we're moving kind of slowly, about 30 miles an hour. On China's notoriously chaotic roads, the robotaxi drove up a ramp, made a U-turn, and negotiated its way around bikers riding tandem and a timid driver. In an emergency, you press this for help. So it took us a little bit of time, but we finally got here. The Baidu Robo service is 24/7, and it looks like the car is going to go off for another trip.
Tesla still retains some key competitive advantages that position it strongly to remain a dominant player in China's EV market. The company's market share in China shrank to about 7.5% in the first quarter of 2024, which shows how strong the competition is in the country. This is why Tesla recently started marketing a new car buying benefit in China as it tries to win back customers. The company started offering Chinese customers who order a Tesla vehicle before June 20th the chance to get a 5,000-kilometer free supercharging entitlement. Also, owners who replace 2 Goodyear tires at one time at a Tesla service center within the next month can get 600 kilometers of free supercharging. And for owners who replace 4 Goodyear tires at once, the free supercharging mileage increases to 1,200 kilometers. Price cuts and special offers like this one help Tesla compete in China, but the company's market share will look completely different once FSD becomes widely available in the country, and also after the robotaxi rollout in China. Though local rivals may chip away at market share, Tesla's size, production capacity, and technology leadership at scale will be incredibly difficult to replicate anytime soon. China's EV market is extremely important for Tesla, as it's the world's largest, worth $305.57 billion currently and expected to grow to $674.27 billion in 2029, so it's only natural that Tesla wants to capitalize on this massive growth and improve its relationship with Chinese officials. Also, last year, The company made $21.75 billion in revenue from its China operations. That's about 22.5% of the company's total revenue, and this massive percentage indicates how succeeding in China is one of Tesla's main goals. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Because from the time that we first called for an unmanned cab, Joe, it took us 4 hours before we actually got the cab. But once we were in it, it actually works.
Right. The 500 operating robo-taxis, which you said at the beginning, I was like, that's amazing. And going to 1,000, it's not quite true. Exactly.
Well, no, it is. I mean, well, there are some that have the driver assistance.
Safety drivers.
But, no, I know. It's a work in progress, as a Baidu executive told me. But I also thought what was interesting is, you know, what happens if you're in there, you have an emergency. So I asked the Baidu executive, you know, what do you do in that kind of situation? And they said that you would have to have like kind of the peace of mind to go onto the app and change the destination. So in case you were going to the office and suddenly you had to go to the hospital, you would have to just change the destination on the app. Or you could do what I did, which is like you called the SOS button, and then an agent comes on and they can remotely stop the car for you. And one thing that she said to reassure us is that they have 360-degree cameras both inside and outside of the car. So they are constantly monitoring you for safety purposes. And in fact, at one point, we opened the door accidentally in the cab, and they told us, please close the door.
It's not just China that Elon Musk has his eyes on, but the entire continent of Asia. Very recently, Elon visited Indonesia to inaugurate SpaceX's Starlink satellite internet service in the country, after SpaceX received approval to operate Starlink in Indonesia earlier this month. The service aims to provide connectivity to remote parts of the Indonesian archipelago, where over 20% of the population still lacks internet access. Also, Indonesia's president, Joko Widodo, has been trying for years to get Elon and Tesla to invest in Indonesia, touting the country's nickel industry, and he said after Elon visited that he made an offer to the Tesla CEO to build an EV plant in the country, and Elon said that he would consider this offer. So this is something that investors should keep in mind, and we might get an announcement for a new Tesla factory in Indonesia sometime soon. But with all of this in mind, should investors buy Tesla stock now? Tesla has faced some challenges recently, including margins compression and slowing revenue growth due to macroeconomic conditions and rising EV competition, but the long-term growth story remains intact. The current volatility in the stock price is expected, as there are concerns about Elon's pay package and whether it'll be approved or not, and even Adam Jonas, Morgan Stanley's high-profile autos analyst and a Tesla bull, wrote that the Tesla shareholder vote is significant to the long-term strategic direction of the company. He also said that as the issue of blocking minority remains in limbo, he expects Tesla's share price to be dominated by the more sobering developments within the global EV industry. Therefore, investors need to vote in favor of Elon for the stock price to stabilize, but regardless of the outcome, Elon is all in on Tesla, and he even liked a tweet that said that he'll always be all in on the company. In my opinion, Tesla stock could rise greatly after the robotaxi unveiling event in August, so right now is a great time for investors to get in if they don't want to miss out on a potential jump in the price. Therefore, putting the current volatility aside, patient long-term investors could be rewarded buying at today's discounted valuations as Tesla remains positioned to disrupt the auto industry. But what do you think? Will you be buying more Tesla shares? And what are your thoughts on Tesla's Asia expansions? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.